Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook from September 16, 2019. Have soybean prices put in a low? I guess the short answer to that question would be maybe, and I think so. For soybean prices to maintain this level, there's three big things to look at, I think, as we move into the harvest season. One's, of course, the trade negotiations. And the thaw with China, while welcome, may not have the kind of legs I would like to see to fully recover to where we would need to be with soybean prices. The other two are production possibilities in both the U.S. and in South America, and I'll talk about that in a little more detail. Last week's crop production report, as reflected in the WASDE report, had soybean yield at 47.9 bushels per acre nationally, and that was down 0.6 bushels from the August report. As you can see from this map provided by NAS, many of the major soybean producing states had yields down from the August report, with the exception of Kansas and Missouri, and some no changes in Ohio and places like Nebraska and North Dakota. One of the big things to come out of the report was the implied pod weight that NAS put out with respect to pod counts, and I'll talk about that in the next slide. In this graph, this is provided by NAS, you're seeing the soybean objective yield pods per 18 square feet versus the implied pod weight. The implied pod weight for September was near 0.35 grams per pod, which is the highest we've seen in a decade. And this relates to the really low pod counts we saw across the 11 major states. This is the lowest we've seen since 2012. And I think it led a lot of market observers to conclude that this yield could come down. One, the pod weight could come down. And we may see pods per square feet change a little bit as well. Over the last 5 years, they show you here how the pods per 18 square feet have changed. And normally they go up a little bit. And, in this late planted crop year, we may see some movement that way, but I think in general people expect the pod weight to come down. Now the big question is, will the yield fall enough to really get us back into some ending stocks ranges where we could see some very strong soybean prices? We saw consumption at the 18-19 marketing year pick up, where we have exports and crush went up. Crush went up by 20 million bushels, exports went up by 45 million bushels. But USDA stayed pat in their 2019-20 consumption projections, which puts us at ending stocks around 640 million bushels for 19-20. So when we're thinking about what kind of yield would we need to see to get ending stocks down under current consumption patterns, if we wanted ending stocks to be 400 million bushels, we would need a yield below 45. Actually, it'd be near 44.7 bushels per acre. Now, are we going to see a 3.2 bushel yield drop from soybeans this year? I find that highly suspect. Now, I do think soybean yield will go down, but to get down in the 42-43 range, we're going to need something pretty severe to happen this fall, and right now it doesn't look like it's going to happen. The other big development, and what really created the rally last week, wasn't the WASDE report. It was the announcement that they were easing trade tensions with China. I want to sort of put this into perspective for everybody today. Last year, in the 17-18 marketing year, we saw soybean exports to the world down about 390 million bushels. But to China, they were down 544 million bushels, as you can see in this little chart. And from 16-17 marketing year, when we really didn't have any trade fight, exports to China were down around 835 million bushels. So while we've heard some positive tone about China buying soybeans, currently I think it's around 29.5 million bushels with some additional purchase that in a range of 37 to 110 million more bushels. But even those levels are a far cry from what we normally see out of China. Now, if trade negotiations in October fall apart, I think you could see soybean prices reverse a bit, despite what could be production issues in the U.S. When I look at the new agreements that China signed with Argentina and Russia about meal imports and how they're actively trying to revisit their hog herds and rebuilding them as quickly as possible, I think this little lull in the trade negotiations maybe allows China to backfill some pork prices to relieve some domestic pressure, and I'm not sure it's going to have legs in the long term. it really might come down to what happens in South America this year. Currently we're looking at total South American production a little over 7 billion bushels, with Brazil at about 4.5 billion and Argentina a little over 2 billion bushels. And there has been some dryness in southern Brazil and parts of Argentina, and it's something to monitor, but it's still a little bit too early to say it's going to have a negative impact on production. If the trade war rekindles and we do have issues with South American crop, we may see some significant rallies this winter in soybeans. But barring some kind of shortfall in production in South America or a trade deal, which it seems a little bit remote to me right now. If you'd asked me 2 weeks ago, I'd have put it near 0% of a deal, but now it may be like 10 to 15%. I don't think China's in any mood to change their structural issues, and we'll see how the negotiations play out. I'd be happy to see some kind of negotiations materialize, because I think that could be a boon to soybean exports for American farmers. So when we think about it as a whole, I think maybe thinking about marketing on some of these rally soybeans might be prudent. It really does depend on where you think the yield's going to turn out and how you think the trade negotiations are going to turn out. But I will say this, the uncertainty on production levels both here and in South America and on the trade negotiations remain exceptionally high. And I think we'll see that kind of volatility continue as we move through the 1920 marketing year. Well, I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. I look forward to seeing you around the state of Illinois.